Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is Carley Garner. She is the author of Higher Probability Commodity Trading, and she is also the founder of decarleytrading.com. Thanks for joining us, Carley.
Thanks for having me.
Yeah, it's a huge pleasure. So, Carley, there's so much chaos in the markets right now, and the Federal Reserve have basically trapped themselves. How bad is Jerome Powell's dilemma right now?
Well, obviously, he's between a rock and a hard place. I think, as you alluded to, he probably put himself there. I think the Fed, and I'm not just going to blame Powell or one particular person. I think it's been a problem that's been going on for a long, long time, maybe
Right.
even decades. I mean, we've just gotten so accustomed to the easy money policies, and the Fed has gotten into the habit of trying to control the business cycle when in reality. By definition, cycles are supposed to fluctuate, and that's healthy. Just like anything else in life, we should see ups and downs, and trying to control it is generally a bad idea, in my opinion. And also, I think we can all agree we're starting the tactics being used to control it are actually getting out of control and making things even more volatile. So their quest to thwart volatility has actually increased it substantially, and that's a problem for all of us. I mean, whether you're participating in the markets or not, just obviously going to the grocery store or living life, you're going to feel the pain from and the consequences of these types of actions.
Absolutely. And where are you putting your money right now, Carly? Or with all the uncertainty in the markets, where are you finding safety or possibly taking risks?
Well, I mean, if we're talking about investment accounts, I'm overweight treasuries. I know that's not a popular place to be, and that's, by the way, I'm a commodity broker. I'm not an investment advisor, so don't take
Yeah.
this as advice. This is what I'm doing, and I was last year was kind of a rough year because I kind of had the same strategy, but in the end, I think that in this type of an environment, the everybody's trying to chase performance, and that performance might be in 2020 and 2021 it was tech stocks and meme stocks and those sorts of things, and
Hmm.
we're starting to get all these speculative uh, euphorias and things like that being pulled out of the market. We've seen it in commodities specifically. So much money made its way into commodities the last couple of years, people attempting to hedge inflation, so they were buying corn and crude oil and
Right.
natural gas and these sorts of things. And as many of them have learned, commodities are not buy and hold assets. You don't just buy them to hedge your inflation. It doesn't work that way. They're boom and bust markets, and they are proving to be more bust than boom at the moment.
And you said about 6 months ago, I think sometime in 2022, that in 2023, we will see new highs in gold. And you absolutely nailed it. Where are we heading now for gold by the end of 2023?
Well, gold is obviously a market. I'm going to use this term again. It's not a buy and hold market, or
Right.
it can be if you're the type that's buying on really big dips and doing it that way. If you're just blindly, allocating money to it and not paying attention to timing, you're going to have a tough go at it. I mean, it took us the previous highs were made in 2011. It took us over a decade to get back to those highs. So if you're the type that's chasing prices in gold, you're going to have a hard time in the short run. That said, I'm optimistic gold. I think that there were a few things holding gold back last year. I mean, obviously the fundamental stories were there. We had inflation, we had economic uncertainty, we had
Hmm.
political uncertainty. But the two things that were holding it back were the US dollar was soaring, like uncontrollably parabolic. So that was a problem for gold. And also interest rates were soaring as well. And when
Right.
interest rates are high, people don't see gold as valuable, simply because gold doesn't pay dividends like treasuries do or other interest rate products do. So it pulls some of the shine away from gold. But those things are resolving themselves. The dollar's come down quite a bit. I know it's bounced the last couple of weeks, but the reality is we're still in a downtrend if you look at longer term charts. And I think the dollar will eventually make its way into the high 90s. That'll put some upward pressure on gold. Also, interest rates have had a rough couple of weeks here, but the
Hmm.
reality is the Fed's probably towards the end of their rate hike cycle. We don't know what they've done to the economy yet. We haven't had enough time to see exactly how that works out. And shoot, treasuries are yielding pretty nice payouts at this point. So I think some money will flow in there. There's a lot of money on the sidelines that's going to have to go somewhere. And I think treasuries might be a place for it. With that said, that'll push interest rates down, and that too will help gold. So I'm optimistic that gold at some point this year will break above 2100. I'm thinking maybe even 25, 2600s in the cards by uh, maybe not this year, but let's say early next year. That said, these pullbacks can be pretty treacherous. We're in the middle of a
Right.
pullback in gold. I We could hold like 1920, 1915, somewhere in there. I wouldn't be shocked at all to see 1850. So that if you look at a weekly chart, that's the uptrend line is 1850. So that's a little lower than obviously than we are now. But if we do see those prices, those are probably levels that bulls can kind of key off of and hope for the best.
Absolutely. And I have to ask you, Carly, we are Wall Street Silver, so we need to know your thoughts on silver. What do you think is driving the price of silver, and where do you see it for short term, long term?
Silver is one of those assets that it's either it's boom or bust, for
Right.
lack of a better word. When it moves, and when it doesn't, it can just be absolutely torturous. So with that said, I coming into this year, I considered $19 to, let's say, $20 as a value zone in silver, and I still believe that to be true. The last couple of weeks have been a little bit sketchy for silver, so my guess is we probably continue to see some liquidation towards
Hmm.
the $20 level. But I do think $20, a little above, little or below, these are areas, not exact numbers. I think $20 is a pretty good place to consider being bullish, because I think that silver finally is getting to a situation where fundamentally it's got the story behind it. Weaker dollar, lower interest rates could also help silver, as I mentioned for gold earlier.
Hmm.
And if that's the case and we hold $20, I wouldn't be surprised to see silver in the 30, 31 area. But again, this isn't, if you're the type of person that wants to buy silver at 20 and hold it forever, that may not be the best strategy. It's one of those things, if you get in and you make some money, take some risk off the table, move to the sidelines and see what happens, because rallies and metals aren't always sustainable.
Absolutely. You said a little bit earlier that you think the Fed is towards the end of their rate hike cycle. A lot of people in the silver and gold community think the second that it comes to an end, or they pause, or they pivot back down to lower rates, that gold and silver are going to go parabolic. Are you in that same camp or no?
Um, I'm not going to say parabolic, but I think it will. I definitely think it's reason to be bullish and
Right.
optimistic. I will say that the Fed has a long, long history of being really slow. I mean, we're kind of, if you think about it, we're in this mess because the Fed was focused on things. For example, they were talking about they wanted employment rate to be, under 5%, and they were focused on that so much that they just kept stimulating and stimulating, and they forgot to pay attention to other things. So I think sometimes the Fed gets blindsided
Mhm.
by reality because it's looking at one thing and things are happening over here. And so I think that's probably what's happening now. I'm not the type of person that thinks that the economy is, um, we're going to repeat 2007, 2008 kind of thing. I live in Las Vegas and we are booming. I mean, people tell me that the economy's sluggish, but I don't see it here. I mean, it is unbelievable how much money people are spending. So I think we are in a situation where we get a soft landing. So I don't think the Fed's going to have to turn on a dime like they did in 2020 to combat COVID and the shutdowns and things like that. But I do think that they're definitely going to rethink their situation. But as knowing that they're slow, they probably won't do that until next year. That said, even if they do, you know, they don't have to lower rates. If they just pause, I think that's enough to keep kind of a floor under the metals markets.
Absolutely. And I want to bring up the copper industry as well, trying to connect it to the green revolution that's coming up here. Everyone's talking about it as solar advances, and it needs so many of these base metals. What do you think will hit the shortage first? Like, will you see silver shortages first, copper shortages? Where do you see shortages first?
You know, the fundamental side of things isn't necessarily my expertise, so I'll leave that to somebody that knows a little more. I don't want to say anything completely more stupid than I already have. But with that said, I do think like that fundamental story in copper obviously is there. The EV revolution is helping out demand. So when I see that going on, that underlying story, I look at the other things that I've noticed in copper. Speculators are net short. They generally are net long copper. They haven't been net short for quite a while. When they do start to get short, it's generally maybe not a signal that we turned the corner on a dime, but it's a signal that maybe most of the selling is behind us. And when I look at the chart, I can see several important interesting things. The the 200 week, not 200 day, but 200 week moving average comes in around 360. We also have a trend line that comes in around 360. So somewhere around the 350, 360 area, I think is pretty supportive from a technical standpoint. And I
Mhm.
think we finally get some of those fundamental stories might actually matter in the mid to low threes. And I think we get a swing higher in copper. I'm looking for like 410 in copper by the end of the year.
Absolutely. And just to get a little bit back onto the economy, there's been so much talk about the debt ceiling lately. And now that the debt ceiling deal has formally been reached, how will that affect the US dollar going forward?
Well, I think we did see a bit of flight to quality in the dollar in anticipation of a potential default. I've
Mhm.
been doing this long enough to know that these debt ceiling debates have been going on for years and years and years. And aside from 2011, they generally resolve themselves.
Right.
I'm not saying there's no consequences to that because kicking the can down the road does have consequences eventually. But
Right.
for now, it generally the markets overreact a little bit in the short run and then they take it back. So with all of that said, I think it does probably take some of the wind out of the sails of the US dollar here the next couple of weeks. The technical levels I'm looking at in the dollar are about 106 on the upside, so we're a little below that on the index. I doubt we get above 106. As long as we stay below, let's say 106, 106.50 in the dollar index, it tells me that the path least resistance is going to continue to be lower. And again, that'll help out metals, even copper.
Absolutely. And Carly, can the US government and the Fed even continue on their current path with all these massive deficits and rate hikes without ever, trashing the credibility of the dollar? Like, where does this end?
Well, I think our one saving grace is most global central bankers are doing the exact same thing. So, we're making mistakes, but maybe other places are making bigger mistakes. That's the
Right.
only thing I could say. So, I'm not one that thinks that the U.S. dollar is going to lose its reserve currencies, not because I think that anything that we're so great or anything special about the
Right.
dollar. It's just that I've yet to see an alternative that really makes sense. So, we'll see how it goes, though.
Absolutely. And you wrote a book recently called Higher Probability Commodity Trading. Why did you write this, Carly? And how can people benefit from this?
So that particular book I wrote to kind of introduce the idea of seasonality using the COT report. The government issues a report. It's actually the Commodity Futures Trading Commission issues a report that tells us who's long and who's short by how much. That's not something you see in stocks or any other asset class.
Right.
It's unique to commodities. And most people aren't even aware of it, or if they are aware, they don't understand how to use it. So I wanted to write a book that gave people the information they needed to improve their odds of success. Now, obviously, commodity trading there's no free lunches. It's a difficult game, but you definitely want to put yourself on the right side of the odds, and that's what that
Right.
book's about.
Absolutely. Well, it's a huge pleasure having you come down to Wall Street Silver and go through all of this. And hopefully, as the market develops, Carly, we can have you back on just to talk about it.
Absolutely. Thanks for having me.
Yeah, huge pleasure. Talk to you soon.